All right, let's start with this, and then we'll look at all the other things we usually look at um, on this weekly Zoom webinar. All right, so here's again, I'm going to try to I'll just give you a view in simple English of where I think things are at, and then we could all make our own decisions, probabilities on how things may end up playing out here. Okay, but let's rewind a little bit. Down here, okay, where we last spoke, if you remember the main issue, two issues at the time, of why we weren't really getting that reflex squeeze you usually get when a lot of things are washed out, as we saw into the lows back here. One, you had the Fed, as we like to say, rigging the game, right? So you had, and we're going to talk about that in a second because I think it's an important piece of information here. But you had the Fed tightening aggressively as far as financial conditions. You had QT in effect, okay? And those are the greater forces at play, right? That's what makes this bear market a lot different than any correction or bear market that we've been a part of. Usually when players are offside, you can time you can get pretty close to timing at least a squeeze, even if it's just a day or two out of it, because the market has a tendency to like to nip those shorts in the butt. But in this environment that we've been in, when you have yield screaming higher, dollar screaming higher, and again, all those things that go into tightening financial conditions having an impact on risk assets, which equities are, those are the greater forces at play that we've been talking about all year, right? That throw a huge monkey wrench into the equation. Okay, so basically where we've been at for probably 2 weeks now, we had positioning and sentiment a bit off sides, right? As far as players being a little too bearish for their own good, a lot of underexposure in regards to equities, right? This downdraft here, a lot of shorting, a lot of de-risking involved. Okay, the fuse needed to get lit, right, to see a squeeze. Something had to happen just to get the momentum kind of moving in the other direction, and that could be the catalyst for a squeeze. Okay, we saw the initial reaction to it. That was this 2-day pop. Okay, I think it's still in play here, and the reason it's still in play, okay, is because we didn't really see we didn't see that panic short covering or short hedging that we usually see, when the squeeze gets going, okay? And, this bear market, we've seen several times where it doesn't come, right? Like this, for example, or this, for example, right? You get these couple day squeezes and then they roll over and fall on their face, okay? Not to jump around, I think that would be a great scenario here, okay, if it ended up playing out that way. If you remember last week, we talked about, we were using that ridiculous word that I just concocted on the fly, marinate, right? We want to see things marinate a bit. And what I mean by that is instead of a squeeze that kind of runs away, forces shorts to cover and hedge, and players get that FOMO feeling, okay, those things are short-lived, especially with a macro backdrop similar to what we have right now, okay? What we would rather have is this thing kind of hang around here and almost almost let people down that are anticipating a squeeze, okay? Because I think that's the main issue. As bearish as this market has been, okay? As bearish as it's been, and we were just talking about what's his name from Guggenheim as an example, right? He's calling crash uber bearish 1 week. The following week now, he's telling people to buy ahead of the crash. All right. I think everybody has become a tactical player, and almost on both sides. Even that, you see, even the most bearish players out there, okay, the most bearish, not even players, the most bearish people on social media calling for squeezes. Okay, that bothers me. And I think that's been adding to the difficulty in trying to not only catch these squeezes, but sit through them, sit through the shakeouts that may develop in the initial stages of it, right? The best squeezes are, and again, I'm not talking about squeezes, I'm talking more bear market rallies. Okay, forget squeezes. Squeezes last a couple of days and they're over. We saw a squeeze, okay? But I'm talking about the healthy bear market rallies, like the couple we saw, are the ones where you get that disbelief in it. You know what I mean? Players, they just don't believe the lows are in. They don't believe the rally can find any headway as far as upside is concerned. And the rally continues until they do believe, and then you roll over and make new lows. All right, that's what happens in bear markets. So I think it's become even more difficult to try to catch these ranges at these sweet spots because everyone's a tactical player now, right? And we'll talk about that a little bit more in regards to retail and what's developed over the past week or so. All right, so going back to the point, we go into, here's the backdrop right now, okay? It all comes down to, if you're looking for that bear market rally, all right, some people think it may end up leading to a bottom here, right? The people who are bullish and looking for this rally. The Fed, this is the point here. We're at the point, and that's a good segue into this. We're at the point now where the Fed usually takes the foot off the brake, okay? We saw it here in particular, okay? Financial conditions were extremely tight, right? To the point, if it continued at that rate, the likelihood is something would have went through the windshield, something would have broke, okay? And almost without us even knowing, if you remember, okay, financial conditions started to loosen, right? Credit spreads started tighten up off no news. And it led to a violent and lengthy, strong bear market rally here, this rally in particular, okay? We're at that point again. And the reason why I say that is, I just posted it, let me pull it up. What? I didn't, where'd it go? Don't tell me I didn't post it to the right thing. No, I did. Hold on, I gotta refresh it. Shakira on there. Okay, look at this, right? So this is from Jeffries. This is just year over year financial conditions. Ew. If things continue to tighten from here, okay, we already saw some things start to break overseas, and that's where it's likely going to happen first. Okay, I think that's why credit spreads, corporate bond yields have behaved a lot better in the States here than elsewhere. Okay, but we saw, in the UK and in other countries, you're going to see something break if the Fed continues to tighten from here. Okay, that's kind of what Meinhardt from Guggenheim is talking about here. All right, because you've got an aggressive tightening cycle, right? I mean, I think Zero Hedge had a tweet. I posted it to you guys in a steam room post on the nightly updates. One of the most aggressive couple of weeks of tightening that we saw since the COVID drop, which was not Fed induced. That was because we were turning into zombies. Okay, so just to drive the point home, there has been financial conditions have been extremely aggressive here as far as tightening. Okay, and on top of that, what's adding to it, you have the dollar which is ripping higher. Okay. And if you want to look at like two charts, if you don't have access to financial conditions and all right, we've been looking at them all week and they tell the whole story. Again, this is not a correlation that's going to last forever. I wouldn't fall in love with it, but right now it kind of means everything. All right. When you have this kind of rip going on, right? These are 2-year yields, short-term yields. Okay. When you got this type of rip going on, this is an intraday 5-minute, right? So this is what went on today. You can't get in front of that as far as at the index level. You can't get long into that because it's going to weigh on equities. Okay, it's going to weigh on risk assets. And here's a daily chart, right? So you could see this rip here that led to the recent downdraft prior to us finding a low this week. Okay, this is the rip. This is what the rip looks like. Look at this, guys. All right, nuts. Okay, and the other chart obviously is the dollar, which you guys I know follow closely. Oh, that's not the dollar. Where'd the dollar go? Oh, here it is. All right, so same thing, intraday chart. All right, you get that rip. I'm talking about for even those day traders who are day trading through, it's really difficult. You got to stick to individual names and try to find some alpha there. It's tough to get in the middle of it. Again, with the indexes. And here's a daily chart, right? Like, look at this, nuts. Okay, so the reason why these are important now, twofold. One, it's a great gauge on whether things are tightening, continue to tighten out there right now, and something breaking. Okay, if this continues, so if you see the dollar go to new highs and 2-year yields continue to rip, okay, we're going to see something break. Okay, there's not a question about it. We're going to see something break. Probably within days, weeks, all kidding aside. All right. But what a lot of tactical players are anticipating, front running, okay, is that the Fed is aware of this. Okay. And like I mentioned, we're at a point, and this is a good segue into this chart. Oh, I did a good job here of managing the charts. Usually I'm hideous when it comes to this. Here's the Goldman Global and United States Financial Conditions Index. Okay, so you could see the aggressive tightening, right? The acceleration upward here. All right. The Fed follows this closely, right? You hear Powell talk about this constantly. Okay, they have to be aware of this. Okay, so either they want something to break, or they're probably not, they're not going to tell us, but they're going to take the foot off the brake, just like they did, right, on the DL without us knowing, back here in this rally. Okay, you remember we talked about this. Remember in this rally, that was the most frustrating part of this rally. Okay, so you guys understand, look, here, if whoever was around there, you remember here we had probably the best setup in this whole bear market as far as sentiment and positioning is concerned. Okay, right here, this played out as good as you can possibly have it play out. You didn't get that runaway rally. You had it marinate down here. You had a lot of tactical bulls lose hope. It was a perfect setup. What was our problem? If you remember, what do you remember what the main issue for us was? Why, it wasn't really worth getting aggressive. I felt it wasn't getting aggressive and, putting on size or giving a long leash to. Nope. It was, we were worried the Fed would weigh on the upside eventually, right? So the risk reward wasn't that appealing. Remember, we said, oh, if this thing rallies for a couple of days like here, you're going to have the Fed come out and talk down the rally and tighten financial conditions. and it's just going to roll over again, right? So I'm not, this is what I felt strongly about. So my problem was, okay, I feel like a low is in place, but what's my upside here? What's my upside? This is all my upside here. Is it worth taking a shot, getting long for this type of upside? So that was the main issue back here for me. It wasn't the setup for a low. I felt I had conviction that that low was going to hold. I just didn't know the reward side of the equation. Okay. And that's kind of where we're at here. Okay. And like myself, people have picked up on it. Okay. And more people now are looking for that squeeze because they're making a bet that the Fed has to take the foot off the brake. Okay. That's the way they're looking at it. So you could see, even with the dollar ripping and yields ripping, the market actually has held up quite well. It didn't get back these gains, and even we see it in the flow too, right? There's buying out there. There's speculation on upside out there. Even with yields, the 2-year ripping the new highs, it didn't stop all day. Okay, that's what they're anticipating. They're anticipating the same exact thing we saw back here and didn't think what was going to happen, that the Fed would allow this to take place, right? So anybody you hear calling for a bear market rally here, that's their main thesis, that there's going to be a Fed pause because things are so tight right now. Okay. Now, again, it's not a given. Okay. It's not a given. If it was a given, I would have got long here and bought with 6 hands. I still don't think it's a given here. Because the Fed's not going to tell us anyway, but the way the Fed sounds, it's like they're not even looking at this shit. Right. So the good news, I think, for us is that this comes to a head here sooner rather than later, in where if things continue to tighten, I think you get something breaks and you get a Fed pause anyway. All right. Otherwise, you just get, a Fed pause and you get some sort of bear market rally here. And we head higher. Harnett thinks something breaks. Harnett thinks that something breaks before you get that bear market rally. But there are people front running it. See, that scares me. Okay, because you got to understand something. From my experience, right? When the real rally, and granted, we're talking about bear market rallies. We're not calling a major bottom here, right? But the real rallies, okay, you're going to have players scared of something breaking, okay? This is the first time I'm in any sort of correction and bear market. I told you guys this, that people want something to break. They're buying. The guy, Scott Miner from Guggenheim, was just telling investors on CNBC to buy ahead of the Fed breaking something in a couple of weeks. That's absurd to me. You know what I mean? That's absurd. Usually what happens is that's what people fear, is the Fed breaking something. This is not a flower vase or something. You're talking about something breaking in the financial plumbing in the system here, right? They're acting like they knock a vase over at grandma's house or something. So these things, again, maybe it's a bad thing with the, from experience, that these type of things scare them, but that's what worries me, because you're not getting that real sentiment shift that you're supposed to get. People should be concerned if the Fed is going to break something. You don't want the Fed to break something. That's how shit gets out of hand. And remember, like we were talking about last week, when the Fed breaks something, that's where you get those scenarios where not only do they tell you they're going to cut rates, not only they tell you they're implementing QE, stocks still can't find a bid. That happens when stuff breaks. You know what I mean? That happens when stuff breaks. So, I just wanted to give you guys an idea of, again, this is obviously my opinion, but I feel pretty good. I feel pretty good that I have a handle on what's taking place here. A lot of times in this market, you have no idea why things may go up or go down, right? But the bullish case out there, right? So if you're bullish and you're betting on a bear market rally, we got the job number tomorrow, right? Okay. If it's a hot jobs number, meaning it doesn't go the Fed's way, okay, the likely initial reaction would be the market sells, okay, because they want to raise unemployment, okay. If it's a strong job number and it doesn't go their way, the market is going to likely sell off initial reaction, thinking that they got to stay tight for longer. All right. So that's what's going to happen with that. Off a better than expected number, meaning the job number is not as strong and we're starting to see some cracks, you're likely going to see a big rip initial reaction at the least. And it, should be a pretty decent rip. Thinking that the Fed pause, confirming that the Fed pause is coming. What I really want to see, I want to see a job number that doesn't show cracks. In other words, a job number that doesn't show any signs of what the Fed is looking for, okay, higher unemployment, and you get selling, right? You get the price action, initial reaction selling, and they buy that, okay? Because what that tells me would be this is in play, but it's going to be less obvious to a lot of people. You understand? Because you're not going to have that news confirming it. So it would tell me that the Fed is taking the foot off the brake regardless, because they're worried about something breaking. So it's really interesting. And we have the CPI too. This is the other problem with bear markets. Yeah, it's not that easy to navigate. You got to hold your nose and either sit through some of this stuff, and you got to be nuts to sit through any legitimate size through this stuff. It's not worth it, or you got to try to navigate around it. You're going to miss moves, but there's a lot less risk that way. So what you could do, right, in simple English, if you get that dip tomorrow off the job number, right, and that's what you're looking for, you're on that bear market rally thesis where the Fed's has no choice but has to take the foot off the brake. You buy a little something, and you got to sit through all the the CPI and earnings and all these hurdles that are on the doorstep, and you're looking to catch this, right? And options, you can put in what you're really willing to lose. That could be your risk, and play it like that. Or you could just, again, like a lot of us have been doing, intraday trade around it with more information at hand. That's the difference. Yeah, Kate, what I would like to see is selling off, and stronger, hotter. I don't know the proper term, but you know what I'm saying. I would like to see a job number that says that the Fed has to remain tighter. Okay, the market sell off on that because it's almost guaranteed to sell off on it initially, but they buy it. You understand? Like you get that red to green type price action. Sweepers come in, buy it, price action, buy it. You know what I mean? And that would simply tell me is that they're looking through that job number. They don't care because the Fed has to take their foot off the brake anyway. You understand? And that's what I'm trying to stress here. They're outside of financial conditions just tightening aggressively. There was no reason for the Fed to take the foot off the brake here. The only reason was they were concerned about something breaking. But you remember how we found that out? We found that out in the minutes after the fact. Remember, the minutes came out and people, a few Fed members were concerned about over tightening. Came out of nowhere. Nobody thought that. So it's almost like, again, not mirror image, but almost identical to, this type of price action, where you get a little choppiness, you get negative news, but they buy it. You understand? Negative news, but they buy it. Negative news, they buy it. And the market's telling you that the Fed has to take the foot off the brake anyway. And then once everybody sniffs that out, that's when it leads to this: CTA cover shorts, hedge funds cover shorts, FOMO, players chasing, and you come out of there. You know what I mean? So for me, that would be the ideal setup to come out of here right now. I think that's where you can milk it and makes the most money out of it, opportunity-wise. I think it could have some lasting power. What worries me is if you get, like, let's say, a favorable job number tomorrow, you're going to have almost everybody on board in a day or two. That's what worries me about a chase on good news. 38.26 was the number, right? And then you got earnings, which are expected to be a shit show, especially on the cyclical side. But I think earnings are going to be interesting too, guys. I really do, name-wise. Now, let's talk about, hold on. Because I had a lot to talk to you guys about, okay? Because I don't think everything's all that bad out there, as we've been talking about the last couple of weeks, right? Just before I get, let me show you the other two here. Here's credit default swaps, right? Just so you guys, we've been looking at this every week, so I figured I'd throw it on here. Same thing, it's been a mirror image of the price action, but all considering, compared to some of the news and the aggressive tightening out there, this wasn't all that bad compared to like Europe. It was a lot worse overseas. Okay, but now you got a little reprieve here, little window where the market can breathe a little bit. And did I put hedge funds? I thought I put hedge funds. Oh, and here are hedge funds. Okay, so you can see they're dipping. They've dipped a little bit into the short side here. They're still not, as we like to say, taking the needle, getting aggressive, right? But that's because they've been doing this for a long time now. They're just no exposure. One more thing, and then we'll talk about names, because I think that's the most important thing right now, to talk about names a little bit, to pay attention to. This was interesting out of JP Morgan today. I think even CNBC, I heard, was talking about this, but we talk about retail, right? And this has been the tricky part of getting that full capitulation out of retail that we want, okay? In individual names, they've capitulated. I mean, they've been selling names for a while now, and it's to the point where they want nothing to do with individual names. And this is the point we were talking about a couple of minutes ago. They become tactical traders in ETFs. They want to trade rallies, bear market rallies, and sell-offs. Now they're solely focused on ETFs. So what are they doing there? They put ETFs away longer term for investments, and they've been trading them. But look, some of these numbers are nuts. The past week, they sold $1 billion worth of equities, individual names. They've been selling every single rally. They letting all, they're puking their individual names into. What's this? Retail traders net sold 2.4 billion of single stocks, from Apple to Meta, Google. So they're starting to spit up even those bigger names that you would never see selling it from this crowd. Bearish sentiment was also evident in the options market. Retail traders sold $1 billion worth of Delta and bought 520 million of Gamma this week. They're selling premium, average retail volumes, total down, small gaps. Where there was one more thing on here, or was it non-retail market orders? I thought there was something on cash here. It might have been the other thing over here. And in the top 5 this past week, the single stocks with the most Delta. Oh no, that's not it. Retail, low turnover among the top 10, Amazon. So they're becoming disinterested. They're becoming disinterested. And we're seeing a little bit of selling in the fund flow as well. Nothing major yet. Nothing major. Not to what we want to see anyway. All right. Yeah, we're going to start seeing that. And Bova had an interesting piece about that out today as far as tax law stuff. They think there may be some names that actually rally off of that. I'll retweet the note when I get off of here. All right, let's talk about some names, because there's not a lot of action, but where there's action, there's been some promising signs. And I think the reason I'm optimistic about that is because I don't see, this can't last forever in where players don't even want to, do any stock picking out there. Been very, very selective, but we should see a lot of improvement. Again, even if the market doesn't necessarily bottom in a new bull market, just a little stability from time to time, and you should see an improvement on that front, right? So we talked about, basically, I'll give you an example. Every time we see accumulation, right, and that's what we want to look for. You don't want to look for one sweep in Apple. It can mean anything, right? Again, this is not new. We talk about it all the time. You want to see accumulation. You want to see sweepers come back and support names, right? They buy it on dips, right? They add over the course of days, sometimes weeks. And, the only place we really have seen it as a whole are the energy names, right? Even this pullback again, it's been primarily energy names. Now, some of us like energy names, some of us, because the rally's been going on a bit, aren't as bullish on it. But that's where it's been at. That's where it's been at. Now, you can still trade these names. I'm just not the biggest fan of building position in these names at this point, because it's not early anymore. You know what I mean? But they've had pullbacks, right? Like you guys, I know you're big fans of Warren Buffett's Oxy, right? I mean, this thing had a nice comeback. Even some of the lesser known names and that you guys have mentioned, this one catches action, right? So there are energy names. BTU, good call. That was probably one of the best names flow-wise that we've seen. Okay. Again, they're not breaking out, but off dips, they can be played. Jesus, this thing, All right. Aside from that, we're seeing story situations. And what I mean by story situations are names like this, right? They're not betting on the group, right? They're not buying Facebook and Twitter and all the social. Elliott Management's involved, right? The flow looks different in this name. And the market goes to new lows, and it's no smooth ride. That's the problem, right? It's not going to be a joyous ride to the upside, but you see a different look, right? You see a different look to these things where it gets supported on dips. Yeah, it was an upgrade from Goldman, I think. I don't know if there was any other news. There's been some buyout chatter, right? I think Google has been rumored. So it's more of a story name than anything else, right? And that's what I'm hoping we start to see more of. So we don't have to get tied into paying attention to these indices nonstop, because that's basically what we've had to do. You have to have an idea where we're at the index level before you can play any individual names, because it's been, high correlation between the two. Yeah, Netflix is another one. You're starting to see some names start to diverge from the indices, right? And not even sectors, just names. So that would be my recommendation if you're not the biggest fan of relying on the markets because of everything we spoke about at the start of this. Start paying attention more closely to action and individual names. And it doesn't have to necessarily be like Pinterest was what we call quality action, right? They were bombing November calls decent size. So they weren't, it wasn't speculation. They were buying with time, and they were dishing out a decent amount of money. You don't necessarily just have to focus on that if you're looking to trade, because that's far and few in this environment. You get even the best of the spec action is worth paying attention to. You guys brought up the name several times, like a name like this, right? Where, off dips, you see sweepers have a tendency to support these names for trades for whatever reason. Okay, may not last forever. I told you a couple of weeks ago, may not shock me. It wouldn't shock me one bit these names end up at new lows down the line. It wouldn't shock me one bit. But during the time that you're seeing that aggressive, even though it's speculative, sweeper activity involved in these things, they're trades, especially off these dips. And the beauty is when you see this type of action, most of the time anyway, the market doesn't have to go up for these stocks to do okay. You understand? The market could be choppy and you could still possibly squeeze out a little bit of money on these things, and then when the market does go up, or you catch some news like with Pinterest, that's when you can cash a half decent ticket. So again, don't think we didn't even come close to missing any of it. It's been mostly energy names outside of the couple we mentioned. But I think we're going to start to see more of it at some point here. I really do. And especially if my worst case scenario for this market comes to fruition, we're going to need that. We're going to need that because without individual names, forget it. You pull your hair out of your head. Yeah, and see that's the main problem, though, Sahil. That's the main problem with the market environment. Like you hit the nail on the head. You see this? Like this type of stock, we were talking about it. You remember? I was arguing with somebody here. Not arguing, joking around. But this is usually the type of setup that I like for position building. Because when you see quality action come in here, okay, everybody else sees a range, but that actually could be tipping you off to a breakout. You understand? The smart money is building a position for a breakout. But to rely on the breakout in this environment it's tough. It's tough. It's tough. So you're better off trading the range like most of you have been doing, And, who knows? I'm not saying it can't break out. It very well can, especially if inflation and we're in a commodity super cycle, blah, blah, blah. Coal's got a decent backdrop somehow, some way. I thought coal was getting wiped off the map. Now it's the best thing in the world, right? Yeah, I know. I can't keep up. I don't know. You're asking the wrong one. I don't know. But, the difference is the fundamentals on these things now anyway, these things were ready to go bankrupt at one point. Now they're printing money. Literally, they're printing money. This thing reported for the quarter, $3 a share. So, you get institutional buying in these names ahead of quarters too. Yeah, what was interesting too, caught some action again today in strikes that didn't catch earnings. Now, again, I don't know, maybe it's just a play on this name, because this is not China, this is Korea. This is Korean, right? It's something Asian, I remember. But it's a truck. Oh, Druck. I thought it was that's what I'm saying. That's right. Druckenmiller has a position in this. Yes. Good call. Yes. But yeah, it's funny you bring this name up. Caught some weird action again today. Is there any news on it, team? Any major news on it? Like interesting news? Yeah, I didn't see anything. That's why it's weird. But yeah, so again, this is just again another example of what I'm talking about. Look, market went down today. This thing had a great 3 days here. Oh, it had an upgrade. Wow, okay. Had an upgrade, huh? Wow. So again, I don't want to, it's nothing to get excited about yet because I think it gets a lot better from here. But we're starting to see signs of this, some stock picking out there outside of energy. It's been all energy. Like I told you guys, for weeks, I could give you like 15 names, energy names that sweepers have been buying dips in for a year straight now. Honestly, a year straight. They buy every dip. I think the game is now pre-announcements and then beat. That's what I would like to see, McBob. I would like to see that. You know what I mean? I think some of these growthier names, McBob, that have been whacked, I think you could probably see what you're talking about there. Some of the more speculative names that got destroyed. Yeah, those are the names I'm concerned about. AMD warned or was going to warn, you're saying? They've just warned now? Wow. See, these are the names that I would be nervous about. These are the names where that obviously nothing's priced in there. Nothing's priced in there. But you have some other parts of growth, even tech, that they kick the living piss out of. They've taken down numbers significantly. The other thing too, McBob, what worries me a bit is the cyclical side. I think cyclicals, we started seeing it with FedEx and even like a Nike. I think like you're saying, pre-announcements, I think we're not even close to done yet. We're just getting started. Just getting started. But let me ask you a question, right? Here we go. This is the question. Okay. If the market comes to the conclusion that the Fed hiking cycle, not a pivot, hiking cycle is done, do you think as a whole on the market, earnings have a major impact? I guess depending on how bad or good earnings may be, right? Like if, for example, again, we're not talking about a Fed pivoting to cutting rates, right? But let's say we get to a point, like I told you this setup, where the Fed needs to pause, right? That's what the market is interpreting, whatever the lingo, the price action, whatever it may be. And you get these warnings like AMD. Are they opportunities, or you think the earnings trump the Fed pause? Short term, I think it may be an opportunity, if anything. You think they still get beat up, Sayo? So yeah, Big Bob, you know, honestly, that's kind of what I'm thinking. What I'm like, again, I don't know shit, but what my gut feel is right now, and that can change, is that there is some sort. Yeah, I don't know if the Fed's going to even admit it, but the market is going to anticipate a Fed pause, and everything you and I are worried about, McBob, gets pushed into next year. And I think there's going to be some pain next year, and different type of pain. You know what I mean? Different type of pain, but still pain. Yeah, and you know that's where right, that's where a lot of the guy, you know, like Hartnett too is kind of pushing his call there. Um, and listen, you can't fault them. Like if we would had this discussion, if you told me the Fed was going to do what they're doing right now, I would have told you, you know, the market be crashing and the economy be, you know, the tires be falling off, the wheels will be falling off. But you know, this economy is hanging in there. There's a lagging effect on what the Fed has been doing. And I think we're gonna see that next year. And I think that's what's really gonna spook people. I don't think this is not really as spooky as people are making it out to be. There's been price action in stocks that no doubt have been spooky, but the economy, you know, it's hardly a flinch. And you know, the indexes, it's been so orderly. It's been so orderly. Sharpies are still full, no hedges, long exposure. Sharpies are long. Players are short the futures market, out the eyeballs, they're hedged up. They're hedged up. So that you would put that in the column for lows holding the rest of the year. Like that would add to the case of that. You know, and kind of like I was just discussing with McBob, you get some sort of bear market rally, bullish phase into year end. And then, you know, next year it's a different story. And you know how sentiment changes. Remember here, right? Sentiment changes in a big way. You get a rally from now till, you know, the holidays. A lot of people are going to think the market's bottomed for good and no more bear market. But yeah, Sharpies are in that camp. And yeah, they got a pair of coconuts. I don't know. Think about that. Like, and you know, Sharpies don't do what we do. They're a whole different case, right? But they basically took off their hedges and were aggressively net long here, sat through all this. You know what I mean? Like, Jesus Christ. Yeah, it's tough to tell them, you know, because we're just different players now. Yeah, if the environment was different, you know, this is you know, something this is a market that nobody's seen before. This is crazy. That's why I think the end of this, there's going to be a weird ending. No, this can't end like this. It just can't. There's no way. You know, like I still, you know, everybody they say like there's capitulation and all that. I see people still looking for opportunities, still calling bottoms, still looking to buy Bitcoin, still talking about Doge coins. Is that thing even still trading? Yeah, I just it's McBob, you've been in the game a long time. With the Fed doing what they've been doing, okay, the implementing QT and the most aggressive, not even the Fed, central banks as a whole, the most aggressive tightening cycle we've ever seen in our lifetime. I mean, you're telling me this is the worst it gets? That's hard to believe. With everybody and their mother trying to find a bottom, like everybody's still trying to find a bottom. Everybody. That's a tough pill for me to swallow. That's McBob. That's what I think. I think the market gods, they're gonna torture them. They're gonna torture them. You know, it's gonna be all out torture. All out torture. Yep. So that's why I'm saying, if you're bullish, okay, if you're bullish, you know, even if you're making a bet that this is a bear market rally to year end and you lose some money, it's worth it if you're bullish, because if the Fed keeps their foot slammed on the brakes here and continues to tighten at this pace, I'm telling you, you're going to see something blow the F up. Maybe nukes. Now, I think we talked about that last week. So, you know, we were trying to come up with what's the one thing, like, you know, prior to COVID, you never thought something like that, a pandemic. What would be the one thing to knock off sentiment to the point where they're scared shitless, even while the Fed is cutting rates and implementing QE? Aliens. But honestly, like, I was thinking about that all night one night, and I said, you know what? I hate to say it because obviously I don't want it, but nukes. Yep. You know, you can see, right? If a nuke goes off and the threat of nuclear war, the Fed, I don't care what the Fed could be telling you, listen, we're rigging the game. The market can't go down ever again, and everybody be in their bunker. He would find a way to spin it bullish, right? That's funny, Steven. Oh, Jesus. You know, but there's still too many people, way too many jabronis, not even people, way too many clowns calling bottoms, way too many. You know, they gotta burn their hands, you know? They gotta burn, the market's gonna burn their hands off. Yeah, well, that's the thing, too. That's what people are gonna say, you know. Nukes, you know, everyone's gonna be in their bunker, and we gotta have the outlook like, listen, if we go to nuclear world war, we're not gonna worry about our stock account, so we gotta push the chips all in. All right? What's the matter, Ed? I'm spooking you? But yeah, no, I mean, things pop up out of nowhere. But trust me, again, I could be wrong, just like everybody else. But from my experience, when this is over, the market is going to act constructive. The price action is going to start to act constructive. Okay, the Fed is going to be back on our side, and nobody is going to care. Nobody's going to have an interest. I know it's so hard to see now, but that's the way it goes. That's the way it goes. You know, another thing too that we've been talking about that I'm just not seeing, again, outside of, you know, energy names, and I'm not seeing too many new names. Where's the new leadership? What's the new names? You know what I mean? Like, there's nothing. What's going to lead this market higher? I don't think it's, you know, the FANGs, the Apples of the world, and all those tech. I think they still have downside. If you guys think earnings are coming down, I think these things still have more downside. So, I mean, do you think the old growth names? I can't see that. The ones the charts look like this? No way. No way. We went over that, right? When they go like this, they go like this. You know what I mean? They go like that. If it's going to be growth, you're going to see new names. I promise you. You're going to see names. Stephen, I don't know if you were around today. There was I was getting signs of it on one name catching flow today. There was a software name, a little one catching a little action today. Was up. Anybody know what the hell that is? It's just, it was one name. I don't know if you guys were paying attention today. Hold on, I can find it. No, a name you guys probably never heard of. Hold on, I'll find it. I have it on here. Hold on. Where are we here? KNBE. You guys ever hear that? I got the sun glaring right in my eyeballs right now. KNBE. You guys know this thing? What is this? But this is what you're going to start seeing. Okay. This is what you're going to start seeing. Cybersecurity, really? There you go. Okay. You're going to start seeing a name like this catch some sweeper activity. And the majority of the people that are, even people who follow flow, even people part of the steam room, are not going to even notice it. They couldn't care less. They're not going to pay attention. And then, you know, you're going to come in a couple of days later and you're going to see some more buying coming in, this time on a dip, you know, and that's how it starts. And then you start to see more of these names. But, you know, this is where it's at, you know, this is the stuff. That's when things start to improve. This core flow today, just today, that I noticed. So Lourdes, you knew this company? You know all these things, huh? Damn, cybersecurity, huh? Yeah. And you know, because this thing, you know, there's no action. We never seen this name. You don't have that even the chart has been doing nothing all this time. There's not a lot of sellers in this thing. But you know, this is the stuff, and because we're in, you know, such an awful bear market, you know, it's going to be slow. You're going to start to see one name like this pop up. You know what I mean? Then you're going to start to see a couple more. You know what I mean? There's not an explosion and influx of 20 names that start catching action like this, but you start to see this stock picking under the hood that aren't influenced by the overall market and necessarily, again, the macro backdrop, right? Like you guys are saying, if this is cybersecurity, it's kind of recession proof. You know, the problem with the other cybersecurity stocks, they're crowded. And they still probably end up doing well. But, you know, this little guy could be the next, what's that one? Crowd, right? That started off that way. Non-binding proposal, Vista Equity, $24. When was this now? That was the news in the name? Ah. Oh, back here, I see. Wow. Yeah. Well, you know, that's why it's just one name, T. They're all story stocks now. You know what I mean? They're all story stocks, just like pins. Right? Pins, Elliott. You know, another name, it's boring, but you know, this name is probably buyable on pullbacks because you got what's his face that will buy it every time. Wendy's. We saw a little more buying today again. I mean, Wendy's, yeah, pelts. Right, the ponytail pump, that was here. Where was that? Right here? That was right here. No? Yeah. So they got shaken out nicely. Yeah. Look at that. Stands out like a sore thumb. I remember seeing flow back in the day with this thing, Chesapeake. The other beast is this one too, right? PANW, that's cybersecurity. Yeah, but they look, they're holding up, you know, they're holding up. They're just a little bit crowded. I mean, look at the run some of these things have had. Crowded, what a beast that was. And are these profitable yet, these guys? Just out of curiosity? They are, right? Yeah, they turn profitable. They're bull. So what are the names? There was an energy name, newish one that caught some action. This is similar to EQT and ET, PBT. This is an energy trust. Caught some action today. Yeah, NEE, that's just a great company. NEE. They're involved in solar too, right? I think. PBR, it was a lot of weeklies, but that thing was active today. A lot of the energy names were really active today. Yep, look at that. Oh, where's McBob? He'll appreciate this because I remember when you were around, McBob, when we were buying off those Tepper sweeps. The new and improved PCG. Look at this bad boy go. Yeah, you remember this? Look at it now, McBob. Look at her go. The new and improved. Remember this thing was starting fires all over the world? Was it 20? Oh my God. Where was it? Oh, here, look. Wow. Look at this. Jesus Christ. Can you imagine? Look at this debacle and then look at this sideways bottom down here. Look at this. You see all this? Hockey stick. Holy shit. Damn. Well, yeah, this thing's been seeing a little flow over the last few days. What else? Anybody else have any names? They've seen some flow. Soon. That was a hedge fund hotel, that stock. Soon. They got buried alive in that thing. Every hedge fund in the world had a position in that soon. How could I forget soon? Anybody see any other flow in any names? Nothing? Nothing interesting? I'm trying to think if there was anything else that I saw by any chance. You know what? I mean, honestly, I don't really have any opinion on it, but there was a decent Bova write-up on it, McBob. If you let me see. This. There's a decent write-up on it with some names too. Stocks that could bounce. I'll retweet it on the private Twitter so you can see it. It's in market updates too. Ooh. CRSP. I didn't see, I read that CRSP saw 4,200 times yesterday, bought 75, sold 75. Oh, yeah. That was tied to stock. That was tied to stock. That's a biotech, right? CRSP? Yeah. CRSP. I usually biotech too. Oh, what about these biotech names? A couple of them put some action. This thing's been red hot though, right? What I do here? Oops. Oh, this had a little pop. There was some nice buying in this SRPT. See, looks like it's a little extended. You scroll back. This stock was the best stock on the board. anytime this thing caught a sweep, a call sweep, you wouldn't even think. You just tail it. Insta money, insta cash a ticket. That's how good they were. And then there was no sweeper activity in this thing for ages. Ages. But look back here, look at this thing. I'm telling you, this thing, all sweeps, was the best stock ever created. And it wouldn't catch sweeps like, every day, ton of action. It would catch it, once every couple months. But it would be good looking action too. And no drawdown. Stock was a beast. But anyway, caught some action recently. When was it? Last week? Caught some decent action, SRP did, from what I remember. So we talk about story stocks. The biotech fit would be the perfect fit for that. Perfect fit, because you're not necessarily tied to the macro economy sensitive type shit, and there's usually news around it. They obviously could be risky though if they have FDA shit going on. Yeah, Blue, that's right. Blue had a little bit of a period of a little action. I think it had news though, right back then. Blue. These things, believe it or not, they don't look as bad. They've been going down for so long, they can't look bad anymore. Maybe they're starting to turn. Avio, I didn't notice that. Avio. I'm telling you, that wouldn't be a bad thing if biotechs are the ones that catch the action. Wow. Yeah, doesn't look bad. Jay, not sure if it's worthwhile, but is there anything telling about the huge SPY put block trade? Oh, no, it was a block, right? Yeah, I wouldn't. The blocks, don't even pay attention to them. The sweeps are even tough. There was a nice size QQQ sweep today, but it was just one sweep. That's the problem. You know what I mean? If they lit it up over the course of the afternoon, maybe you say, maybe this guy has something up his sleeve, but SPX trade. I don't follow SPX, but supposedly that was the catalyst yesterday for a bounce, right? The way they were saying it. SPX, you talk about hedging. You know how much hedging? You got a ton of put selling, way out of the money put selling. This SPX is a mess trying to read flow there. So hard. You got to really know where these orders are coming from. This was the QQQ bet today. Look at this. I mean, that's a freaking bullish sweep right there, huh? Jesus Christ. That's a monster. And I didn't see, there was nothing closing anywhere near that size. Let me check again. Hold on. Tide. No, I don't see anything. Big orders going off though in these ETFs. Here are like the top trades in the queues. Yeah, XBI has been seeing some call activity. Yep. Where is it? Oh, I gotta update it. This is so annoying. So this is the sweep we were just looking at the top here. 8.7 mil. That's a good looking sweep, huh? I gotta go look at the details of that sweep too. It must be insane. And you see nothing. Tide, cross. This is pica. Nothing here. Nothing. So No roll today. It's just so hard with one order. It's so hard to try to make a case. That's a good looking ETF sweep. November, we got to remember that line, November 4th, 295s. We got to remember that line tomorrow, especially if we get a little weakness, if they hit that line. No, everything's short term, McBob. That's what I mean. The flow has been screaming that everything's been a bear market rally this whole way, all year. All short-term speculation. And what about the lottos, right? You see how many lottos are out there these days? Lottos all over the place. It's like they don't, it's like they don't want to spend over 25 cents in premium. But, again, I complain about it. It's a bad thing because you want to see real action, but it's just as good as a signal as if we were seeing it, because it's telling us that there's no real players behind any of this, There are no real players. They're going to stick out like a sore thumb when they show up. And like McBob's pointing out, you're going to see position building. There's no position building. This is all hedging and speculation, roll the dice. They're not building position in names. We don't want to look for what the way we play options. We want basically institutions that are building position in equity and just utilizing a little leverage in the option market to add. That's what we're looking for. And these little Pepsi Cola racketeers we see playing all day long, it trades like, you'll see like Rivian, 40,000 contracts on the day. You add up the premium, you can't break $1 million. So you trade them, that's all. You trade them. They can create momentum. TQQ, it's right, but that's the thing, Damien. Like, how do we know? We see like $50,000 TQQQ sweeps, okay? How do we know it's not a hedge? It's impossible. It's peanuts, 50 grand. Now, you see a player legging in a couple $1 million worth of TQQQ accumulating throughout the day or a couple days, that's a different story. But you see a $50,000 sweep in TQQQ, how? Like, come on, Yeah, you're going to see. And not only that, if somebody's gobbling up TQQQ, you're going to see that fund buying, the makeup of it. Apple, Nvidia, you're going to see them playing those names too. You're not going to see Apple catching put sweeper activity at the same time, right? Like, that's what we're seeing, like some call buying in TQQQ or something, and then they're sweeping Apple puts like crazy. That's the problem. That's why these names are really difficult, guys. I know they're liquid, which makes them great for option trading, but they're just trades right now. You can't get an edge in these names. You can't. Everybody is playing in these names. Everybody. They're hedging in these names. They're speculating in these names. They're replacing stock in these names. You know what I mean? These things, you talk about crowded trades. This is the definition of a crowded trade, these names. Look at it. Yeah, there's been, again, this is the first time, right, that maybe you're seeing a little shakiness out of Apple in the flow. But that too, like, McBob, you're telling me the bear market was going to be over with Apple ready to break out to new highs? What kind of bear market is that? So what happened? Everybody was selling everything else. You know what I mean? And going into Apple thinking it's bulletproof. Yeah, that's what happens. Oh, Apple's inflation proof. It's recession proof. It's everything proof. It's a lock. Nothing's a lock. They'll learn. They'll understand. You know, you hear people, oh, yeah, I'm bearish on this market. The Fed, QT, tightening, aggressively raising rates. I'm just going to buy quality and buy Apple. What the fuck are you talking about? You gave every reason to sell Apple. You're buying Apple? You know, thinking like it's not going to get affected by it. Yeah, this has been, it's amazing, McBob. I tell you, my conspiracy theory hat goes on again, but it's amazing how mechanical this bear market has been to this point. No? Honestly, it's almost like the Fed has a puppet with strings on this market right now. That's how it's been. I doubt it stays that way, but that's how it's been. You know? And that's why everybody is thinking here you get a bear market rally, because that's what's going on. Every time you get to the point where on the brink, basically, of something breaking, it's like the Fed, lets loose so the reins, and you survive for another day. You live for another day. But it's been mostly all the speculative parts of the market have been drained. Though that's where the pain has been. The quote unquote quality and at the index level. This is not pain. This is not pain. And it may be pain through time. That's the scary part. But again, don't get scared, because we got individual names. That's our scapegoat. That's our get out of jail free card if this is a bear market through time as well. Yeah, crazy, right? Like, we don't know the half of it, what goes on, McBob. You know what I mean? We don't know the half of it behind the scenes. This game is so rigged. We have no idea. Yeah, weed stocks caught a headline, a Biden headline. I didn't really listen to it, but I saw a few algo sweeps go off with it. Yeah, Credit Suisse. Let me tell you something. Credit Suisse, this thing was supposed to go under a gazillion times already. This in Deutsche Bank. You know what I mean? This is, again, you have Credit Suisse blow up. They'll buy that news. That's not going to scare anybody. They get bailed out, whatever happens, But look at this. Look at this chart. Look at this. You know how many times we've seen Credit Suisse default swaps blow out? And this guy too? This guy was dead and buried. Deutsche Bank. Look at this thing. What a menagerie. Right. Exactly. You might be right. It might be timed perfectly. DraftKings, ESPN news. Look at that weekly. Yeah. Yeah, just play, right? Just understand, Lord, we're playing, you know what I mean? Size down appropriately, play, if you break even net, that you take it. You get a little lucky, you make some money, even better. And just buy yourself time, you're buying yourself time. What everybody's talking about, they're not wrong. The problem is everybody's talking about it. What everybody's talking about right now, that the end of the bear market, the start of a new bull market, generational opportunity, the whole 9 yards, they're not wrong. The problem is when those opportunities surface, nobody's talking about it. So it makes the process longer. That's all. But there'll be some stuff to do while we wait. Right now, there's up to this point, there's been less. Now we're starting to see a little more action in individual names. So there's a little more, and it gets better. It gets better. The overall market may not get better net, but for us, action-wise, it'll get better. It'll get better. And more importantly, we'll be around to pick up pieces whenever that day comes. Whenever that freaking day comes. God damn, I know. Kaplan and the other guy, but they found him not guilty. Those two guys, I don't know. I like those two guys behind the Fed. He's got a job now on CNBC or Bloomberg, not Rosengren, the other guy. He comes on CNBC now and Bloomberg all the time. The Vice, the consigliere to Powell. No. Oh man, here we go. Start me with these names. You know his name. I think it's with a C. Clarida. Him and Kaplan, forget it. They had the best entries and exits you can possibly imagine, no? Supposedly they were already doing it with money they had in funds or whatever. Who cares? So you're moving around a couple million in funds and you get out before COVID shit hits the fan. And then you get in when the Fed's going to throw in the kitchen sink. Who's better than them, huh? But see, I don't mind those guys. I like to have those guys around because, when you hear them talk, it means something, These guys now. Yeah. Yeah. Exactly. All right, what else? Anything else? CTA positioning and flow. They can turn into buyers here if you get a little bit of upside. So again, I think like if we do get that bear market rally, I really do think it's gonna pan out something like this. Or I should say that's how I want it to pan out. That would be really nice. That would be real nice. Because these will be really good clues to this coming. You understand? Otherwise, if you just got that FOMO rally, something like this, or where was the CPI? This. That's what you don't want. You know what I mean? Because, right, some of you guys were saying you can get a lift to the CPI, everybody expecting a soft CPI, and then you got this again. So you want something like this. Marinate, like you're making good sauce. You don't have to feel like you're in a rush. The game slows down a bit. You see sweepers, you see what names they're buying, you got time. Nice and easy. And then when you start to see things pick up, you're ready. Tomorrow you get a gap and go. You're just looking to get in the middle of shit and scalp. So you want this. Oh, yeah. I don't think we're going to see that type of action for a bit. I don't know. I could be wrong. Again, that's just an opinion. But what we will see is speculative action, but not in weeklies per se. You know what I mean? So what you'll see if we get something like this, right? What you'll see is they'll start picking names November, December calls, that sort of thing, into year end. And you'll have names to look at. So in other words, the difference would be, instead of a rally just going up, with the FOMO chase, and where everything moves at once, you'll get something like this, off where it marinates here, where this group of names will move, then it'll be this group of names will move. You understand? So you have more opportunities. But again, I'm talking about, if we get a bear market rally from now till the holidays, you understand? So I'm not talking longer term. That would be real action. If we start to see that, that would be signaling to us that this could be a major bottom if we start to see that accumulation with time. If we start to see aggressive buyers that are going out to February, March of next year, you know what I mean? That could be signaling something more than just a bear market rally. Maybe even, it could be a rally in a bear market, but it could last 6 months. Yeah, and that's what I think, guys. We gotta watch out getting hung up on, is this the bottom? Because if this is a bear market through time as well, and a lot of you guys are on that page, okay, you can't get hung up on that, because this could be a low till February next year. And then, something blows up and we go back and break lows. You understand? So I think that, like I said, the more important thing is this the start of a new bull market? That's the more important question we want answers to. Is this the start of a new bull market? Because then all the other stuff doesn't matter. You understand? We're focused on new names, potential new leaders, that type of thing. Yeah, and say, what happens, right? That could happen next year, right? Without a doubt. That doesn't have to happen this year. That can happen next year. So, these lows can hold up. And then, like you guys were saying, some of you were saying second quarter next year, you think shit will hit the fan. I mean, everybody's just assuming next year is going to be a good year. Kind of what happened coming out of 2000. Kind of similar to what happened back then. The bear market rally, like we've been seeing, right? All the flow is speculation and shorts hedging. So you'll see all the heavily shorted names catching weekly action. You see Apple, Tesla catching weekly front month action. It has a speculative look to it, right? If it's something more real, okay, a lot of times you won't even see that rush to buy every single day. You'll see them buy on dips. And like McBob was saying, what they'll come in and they start buying leaps, or they start buying something that's 9 months out. And you don't get that immediate reaction off the stock. A lot of times the stock does nothing while it's catching flow, but they're accumulating. You understand? That's the more real action. That's the more real action. The flow we've been seeing up to this point has all been mostly shorts hedging. Honestly, that's what it's been. Get some exposure as quick as you possibly can for the short term. So what do? They sweep weeklies. They sweep front month. Right. So you start to see accumulation in names. That's what you start to notice. And one of the more important things, you're going to start to see a lot of newer names. Again, they don't have to be new IPOs, but not the old leaders, not the stocks that were catching all the flow during the last bull market. You see new leaders, right? Like I was giving you guys the example, like Twilio, Roku, all these names, nobody knew them prior to them, becoming new leaders in the sense of that growth market. Shop. So you see the next Shop, the next SE, the next Net. That's what you start to see. And there'll be old names as well that are part of it, but you'll see a lot of new names. You see a lot of new names. Yeah, so like this is 2001. Like, look, right? Right? People thought like this was going to be a bottom. Then you had 9/11 happen after that. So think about like what we've been through now. Okay, you get a bear market rally like we're talking to December, and then December you get a terrorist attack like 9/11 where the stock market closes. Like think about that, and the market goes to new lows. That's what happened after the tech bust. This is 2001, right? Then here, double bottom. Look at this rally. All right, and look at this. You talk about torture. And then whoop, and then another low. Whoop, and then there's your official bottom. July, this honestly, I don't remember. I kid you not. The reason why, all bullshit aside, okay, you guys have heard this story, okay? I would say probably, wait, is this 9/11? Which is 9/11? This is 9/11, right? Yeah, this is 9/11. Okay. So from this point, it was actually even before that, I remember. I think it was this point on. Okay. Would you believe me if I told you during all this time, I had my best years on the long side of my career? Okay. Think about that while looking at that price action. Okay. My best years weren't off COVID, right? They should have been, but it wasn't. It wasn't 2009. My best years were here. Why? Individual names, okay, stock picking was incredible. The market was doing all this. Tech stocks were bleeding and dead, and all the popular stocks were doing nothing and going bust. And under the hood of the market, small cap, mid cap were breaking out all over the place. All over the place. Okay. And you know what's funny? While the S&P 500 and NASDAQ did this, the Russell and the small cap index did this. All kidding aside, it was an uptrend. Okay. And almost like a bull market, when the market had something like this, like a 9/11 or something like this, you would get a correction in those stocks, but they were rallying for 3-4 months. You understand? So you would get a normal correction. Was that? Yeah, I mean, I've been hoping for the that small cap divergence for ages. Since then, we haven't seen anything like it. Maybe, I don't remember. 2000, what is this? This is 2002, right? What the hell went on in 2002? Maybe. Was it WorldCom? There was so much crap during this bear market, boy. Enron, I know Enron, yeah, Enron went bust. It was crazy. And my best year, my best 1 year was 2003. And that's when everything ripped. Everything ripped. Everything. You could see even the S&P 500 NASDAQ rate. That was the best year. It was It was nuts. It was nuts. And it felt amazing too, because think about it. It wasn't like the COVID rally where everybody is making money. You understand? Everybody was buried and trying to find bottoms in the market and tech stocks while this was going on. You understand? So it wasn't like it was a crowded trade or anything like that. It was almost like nobody knew it was happening. And crazy moves, guys. I'm trying to think of names like you would know. The Chinese internet names I told you, because that I know you know. Like the NetEase. Okay. I had, at the time, I had managing client money. It was my biggest position, NetEase, at $5, 5 and change back then. Sina, Sohu. That's when the Chinese tech and internet blew up back then. All right. That's when those things were put on the map. This is a weekly. Look at this. This is NetEase. Okay. But yeah, this again, I hope we have a time like this. I hope. Yeah, as long as it doesn't even have to be what happened? What do you I thought you guys were it doesn't even have to be something like that where the small caps diverge like that. Because there's going to be individual names regardless, like I said, you're going to see recession proof names, could be medical, biotech, certain sectors that get hot, right? Like, solar, like it got hot recently. So you'll see stuff like that, but that's what gets you through, this type of mess, a bear market. Again, I hope it's not that's my worst fear, is that we go into something like that, based on the whole participation thing, but I hope not. Because then, you're kind of relying solely on action and individual names, and you hope they come around. This is a weekly. NASDAQ got blasted though. CMGI. Woo. Look at that. Like that. We're talking about like now the pain. Think about this. A major index. Do this. Look at that. Now that's pain, my friends. Okay. That's what I mean. People don't know pain. This is pain. Lord, if that's scary, no? I mean, that's the NASDAQ, for Christ's sake. Yep. Jeez. Where would we be now? Where are we? Here? Well, where are we? Here? Lourdes, don't give me credit. You're pushing the buttons. Now we got to be ready for when the tide turns, We got to be ready. Again, just stay tuned. I know you will, Lourdes. I'm just saying in general, you got to stay tuned in. Just stay tuned in. Yeah, that's honestly, like, definitely, that 3,000, that would be a nice cleansing. That would definitely be a nice cleansing. So that's pre-COVID. Pre-COVID highs is what? 3,300, 3,400. Yeah. That's why, guys, it doesn't have to be that painful as far as downside. It could just, it could just be a lot of time before we get back to new highs. You know what I mean? Yeah, exactly. So that's why I wouldn't get too hung up on the downside. Oh yeah, and especially these days, right? So we could be at 3,400 by tomorrow in this market. So it can happen quick. Yeah, T, that's, that people don't realize that, because, the markets, they don't do too much of that. But you go through a decade of just range bound market. But again, there'll be opportunities in names. You know what I mean, T? And like he said that, right? There'll be opportunities in new names, especially. But if you're all hung up on trying to pick a bottom in the market and the old names, that's where it can be really stressful. So, all right, ladies and gents, as always, a pleasure. Enjoy the job number tomorrow, right? And even more so, we get some weakness. Let's see if they gobble it up, because could be some confirmation that we're going to have that bear market rally. Yep, love you guys. I'll see you mañana.